Hello traders, welcome to another daily analysis. Today is January 11th. Right now we are 4 minutes to 7 o'clock p.m. Eastern Standard Time. So let's get into it. Today we had another positive data from UK for the manufacturing production. So again, that did not give us an opportunity to short pound. And later on, we have Bank of England, Carney speaks. Carney, it's a person's name, so it's capital C. Carney speaks. Basically, it's really nothing new, but he was cautious about the future of the banking industry, the banking sector, especially for London. The financial sector is the most important sectors. So if the Brexit, is still clueless, but if they lose the single market access or the passport, it's really devastated thing for the banking sectors, because that's really what London is about. It's a financial hub. So of course that is another negative sentiment for the British pound. And later in New York session, crude oil inventory had a large build-up. However, that actually did not hurt the oil market. On the contrary, oil market actually went up. But the reason, of course, which is also the real driver today, was the press conference. So the press conference of Donald Trump yesterday, I said that it was a tradable event, but I didn't really know how much effect it had. And now really looking at, I trade through it today, I just realized this is pretty much what's going to happen in 2017. It's that the political events are really the major players. So a lot of traders I talked with on the forum, nobody really thought it had a huge impact, but it did give a huge impact. And this kind of event sometimes nowadays actually become more important than central banks' comments. So the press conference was a main driver today, and if you follow through, you'll see today pretty much is the roller coaster ride. So what happened is that the market, ever since yesterday's London session, was largely started to buy US dollar. So people start buying US dollar right on the London session. It's because expectation that the Donald Trump will give a lot of policy, a fiscal policy, a future stimulus, infrastructure, things like that. All the positive talks in today's press conference. And the reason I expect that is because he did that back in his victory speech back in last year. So they were expecting to pretty much give market another boost. So we saw a lot of buying into the US dollar. And the press conference today, of course, the whole thing was really about the Russian hacking. So really very little talks about fiscal policy or any real economic stance. There's really nothing about that. It's really just, things just keep going around the Russian hacking. And same as the press media, really people want to dig into that. Of course, that itself is not really a negative event. Really, he didn't really say anything negative for this conference. However, the largest sell-off for the US dollar really came from the previous expectation. So basically, traders were disappointed, and people unload their position, and that's why you see a tank in the US dollar. And that's why we say it's a roller coaster ride, because you have a large sell-off at the beginning and the large buying. So I'm going to go over the daily chart, but you will know that's exactly why I try not to place any daily trade ahead of this kind of event. And I'll tell you later, because if I have done that, I would really be stopped already. So basically, that's really the power of press conference, especially if it's not like this every year. But I think for 2017, this is really a political year. It's not only in US, in Europe as well. It's really going to be the main player. So whenever you heard, this kind of event, really pay attention to the financial market. Sentimentally, equity market were actually largely green. So really, the market did not get affected by the press conference because, as mentioned, there was really nothing negative about it. He didn't really, give you a big surprise negatively. No, he just didn't give you the positive news that people were expected. The oil market was actually also up regardless of the large bill. Now, mainly, of course, because of the US dollar. The US dollar dropped, and that really helped the oil market. So this is really a denomination of play. Really, it's not fundamental news comes from oil market. But of course, that helped Canadian dollar a lot. As I mentioned, like CAD is already a pretty good currency to buy. Because the correlation between CAD and oil market has separated a little bit in these past few weeks. So now the oil market had really, again, helped Canadian dollar more. So for euro, there was no specific news or data, but I mentioned euro is acting as a counter trade, right, versus US dollar. So today you also see euro at a roller coaster ride, with largely sold off initially and then later on only to be bought back during the press conference and after the press conference. For US dollar, already mentioned, another roller coaster ride. For British pound, it's also a roller coaster ride versus US dollar, but that's only because the US dollar has a large sentiment today. In terms of other currencies, British pound really lost its ground against all other currencies. Because this uncertainty is such a huge negativity for British pound. And really, I think people in Britain really started realizing the effect of Brexit, and really, but of course nobody knows what's gonna come out. It's really going to be an up and down year for British pound, and that's why when trading it, really be careful. I would suggest you tighten your stop. It's better to do intraday trade probably for British pound, just because we really don't know how it's gonna play out. For a Canadian dollar, as mentioned, it's a strong currency. The oil market certainly helped the Canadian dollar. The Aussie and New Zealand also were largely benefit from the US dollar weakness. Now, on top of that, if you look at the chart, even from London stations buying the US dollar, the Australian dollar and New Zealand dollar were pretty strong. They hold up pretty well, basically, against US dollar previously. And that's why once the sentiment shift, they actually went up higher and faster. I actually took a trade which I managed it badly, and I will tell you that later on. For Japanese yen, Swiss franc also were helped by US dollar. Although today's risk on sentiment usually hurt Japanese yen and Swiss franc, but and it actually was like that, for Japanese yen and Swiss franc versus other currency, they all lost the battlefield. But versus US dollar, basically US dollar is the weakest currency for today. So in conclusion, whole currency market, as mentioned, very sentimental, driven by the political events. So be careful when you trade in the event. Really watch out for, even if you don't trade fundamentally, you don't need to, but watch out for the major events like this. If you have any press conference for Donald Trump, for Janet Yellen, for Carney, for all these more important central bank speakers, for ECB, Draghi, really be careful, because they actually had more momentum for this year, for now. So let's take a look at our chart today. I trade through the press conference, and to be honest, during the press conference, really I couldn't really tell which direction it's gonna go. And really, by looking at all the news media, same thing, nobody know, because as I mentioned, there really wasn't really any negativity from Donald Trump, right? So you see this large buying back, it's really just people were selling, it's just this is a disappointment from traders who were sold initially, and that's why you see this kind of surging. So during the conference, I have no idea what direction it's gonna go. I took an Aussie dollar long trade, and that's because just at the time when Donald Trump said that he is going to put on tariff, he is going to build a wall. So things like that I mentioned yesterday, this kind of comments definitely is a negative sentiment for US dollar. So just because of that, I took a trade. It's very, very low conviction. That's why I have a very tight stop loss, 30 pips. What happened is that it went in my way for about 10-15 pips and retraced, and I just got out. I got out at a few pips above break even, and that was really really terrible for me. There's a few reasons that I would like to mention, because nowadays when I trade a trade, whenever I'm in profit, I really don't like to have a target, because for me, I don't like to cut my profit. For me, being a trader, the most important thing is to control my risk. So the only management I have is always lies down to the risk. How can I reduce the risk? How can I control and manage the risk? Because once I do that, the profit will come on its own. So that's really my philosophy of trading nowadays, is that I only need to focus on the risk. Once I eliminate the risk, I don't really need to care how much the profit is, because it will come. So for me, I always use 3-bar exit. I always tighten up, and generally I use 3-bar exit. Many of you know that you learn from Walter Peters, but you can use other things like swing high and low. Nevertheless, the point is you should never, for me, at least for me, should never really take profit. I don't really have a profit target. And I did that today. I took off the trade that was supposed to be a winning trade. Now, there was nothing wrong to want to get out, because as I mentioned, I did not have enough conviction. But I could have just moved to break even, and that the market stopped me out. So that was really one thing I did wrong. If I have moved it to break even and the market stopped me out, that's fine. For me, psychologically, that's perfectly fine. But for me to jeopardize and try to gut out myself, I missed a very good winner. So that's what happened to me. I got in at 0.0384, which is actually the low. So this is the low during and after the press conference. And you can tell that it actually went up, 60, 50 pips, all the way until almost 100 pips was the profit that I could have made. That's the profit I actually lost. So I got out, only make about 6 pips. And the funny thing is that if I had moved to break even, I would not get stop out. It would actually, went very close to me, 5 pips away, and only later on to go to my direction. So that's really, something bothered me deeply today, because nowadays losing or winning did not really play any emotional effect for me. It's really how I trade. If I playing everything well and I lose money, that's perfectly fine. But if I made this kind of human error, that's really something I kick myself. So that's really something I learned today. I did not follow my rules of setting up to break even. So basically, while you're in profit, definitely you can tighten your stop loss accordingly. It really depends on your discretionary judgment. But for me, the number one key is that don't cut your profit short. There's really no reason that you cut your profit short, because psychologically speaking, or you want to do a fundamental analysis or technical analysis speaking, even if you are in doubt, you can always move to break even. You can always tighten your stop loss. You can even tighten to 5 pips away from the current price. But for me, that's all better than you get it out yourself. Now, the only time you get out the trade is when you are in loss. So if you're in the loss and you re-examine the market and realize, things is not going your way, then definitely you can get out earlier, because by doing that, you control your risk. But of course, sometimes you don't want to do that just because of fear. So that's really the hard part of trading, because it's really a paradox of trading. There's really no right or wrong way, depending on how you trade psychologically. So for me, anyway, that's really my biggest mistake for today, because I basically left money on the table, and which made a mistake that I shouldn't have. So that's really what happened to my Aussie dollar trade. And I actually again took a dollar yen trade alone. So what happened, I took out 115. So I took out 115 because after the press conference, things start to die down. And I re-examined the market, and really fundamentally speaking, US dollar, as mentioned, it's still very strong. So for me, that's a conviction to buy at deep. As I mentioned, I always try to buy at the deep of US dollar. So I did got in at 115, and it went up a little bit, to 115.62. Went up, and I basically tightened my stop loss to 3-bar exit. And of course, as you can look at the chart right now, it's live. I got stop out, so a few pips profit. But this is way much better, not because I make money. It's way much better because I manage it in the right way. I did not get out and let the market basically gate me out. So even though I could have made more money if I get out, but I really prefer trading this way. Just tighten my stop loss. So same as euro dollar, I took this one as well. After the press conference, I shorted 1006. It went down, went up. I tightened my stop loss and got stop out with a little bit profit. So these two trade was pretty nice. Aussie dollar trade was really something I'm still feel the regret, just because the analysis was great. Like I mentioned, I was really looking at this chart knowing that when all other currency versus US dollar has been largely sold off during the London session, Aussie is the only strong one. Let me take a look at Newsy. I'm not sure what happened to Newsy. Newsy is pretty much the same thing. During the London session, it sold off a little bit, but it hold up pretty well. Because if you look at euro dollar, during the London session, it completely dropped to the lower end of the pivot point. If you look at pound cable, it actually completely dropped during the London and beginning of New York session before the press conference. So Aussie dollar was really strong, and that's the first thing. I was really right in the right conviction, and I actually got in at the bottom, and then only to if I had a hold this trade, I would still be in this trade, and who knows how long it's gonna go, because we might pause here and keep going up. So that's really something I should have managed well. But anyway, that's just the nature of trading. You learn by actually doing it, and every day you will really discover something new about yourself. So okay, that's it for the risk events today, and tomorrow really don't have any risk events. We have Janet Yellen speaks, but that's really later on in the Asian session. That's tomorrow's Asian session. Other than that, we don't really have anything except Friday. We have. Let me take a look. Oh, I cannot. Friday. I can. There's something wrong with my. Oh, okay. Right here. Friday we have the so Thursday don't have anything. Unemployment claim, as mentioned, not really a tradable event because it basically comes out every week. Of course, if you have a large, basically, yeah, you can still do it. If you have a large drop, which very, very highly unlikely, but if you have a large, you have a large surge, then that's going to be a signal to sell US dollar. Why selling US dollar? Because the sentiment is negative, so you might as well go with the sentiment. So basically that's the difference. Is if you're trading a risk events, which is a short term, you want to trade with the sentiment. If you're holding a more long term perspective, then you can trade with the fundamental, because everything eventually will revert back to the fundamentals. So 7 p.m. you do have Chairman Yellen speaks, but I don't know what's the content about, but that's really later on in the Asian session. Trade balance, this will affect, again, Chinese data will affect Australian dollar if you are holding that. And that's it for Friday. That's the only thing. Core retail, PPI retail, and PPI. This is another tradable event. But we'll have to see what happens tomorrow to the US dollar. Are we still in the negative sentiment, or things will revert back to the fundamentals? So let's take a look at our daily chart. First thing first is that I actually have a trade that I'm looking to enter, which is Newsy Swiss. So Newsy Swiss, as mentioned, the risk on sentiment has hurt Swiss franc today and helped New Zealand dollar. That's the first thing why it went up. Second thing is that the dollar weakness also helped New Zealand dollar. And third thing is that fundamentally speaking, New Zealand dollar is definitely way much stronger than Swiss franc. So that's the first check mark we had, And in terms of risk calendar, there's really nothing significant about for the next few days for New Zealand and Swiss franc. So that's why we removed that risk. Now, sentimentally speaking, the market is still edging higher, financial market. And it's really pretty much going to be like this to the sideways up until January 20th. Of course, sometimes you have this kind of press conference or financial events, but as you look at the market today in general, it's still a very positive risk on regardless of the press conference. So the only thing that's being sold off is the US dollar, is the currency itself. Everything else was being bought. So that's why that's my conviction comes in. And of course, technically, this is a big shadow signal. This is a bullish signal. I do like the fact that it penetrates this area of space. And of course, if you zoom out, you'll know that we are really at this kind of resistant area. So it could go the other way. It could go up, go down because the resistance, or it could break the resistance and become a support. It actually broke up or close above already, but for me, resistance support is not a single line. So this is just a resistance zone, right? So it does break above, but for me, really, the reason to enter is, first of all, fundamentally, I like New Zealand versus Swiss franc. Sentimentally, the risk on market continue to help New Zealand dollar. And the third thing is technically, we are at a long-term uptrend, as you can tell. So that's why this thing, it's a long-term uptrend. So it's a nice trade to keep going higher. Stop loss, of course, I always use daily range or things like that. So my stop is way below, not the candle low. Nowadays I don't like to use a candle low because you get whipsaw very easily. So my stop loss is below this, below 0.7050. So below this critical line. That's my stop loss. Profit target, I don't really have it. Again, I like to use trading stop to let the market stop me off. So really just a heads up, this is something I'm looking to enter. Of course, I will re-examine later on with my trade plan, but this is something I'm looking out for. I don't really have anything else, but I'm still gonna go over just for a learning perspective. So let's take a look at our 28 pairs. 8 major currencies. So first thing is the euro. So euro pound, what happened is right after this, yesterday we're saying this is a great technical signal, but as you can see, it really didn't go anywhere. It gives you a doji basically. Now today what happened is that it's actually, if you're in this trade, then it's not looking good, fundamentally speaking. Why? Because the British pound is really negative right now. So this really, basically has more sentimental strength into euro right now. That's the first thing. Second thing is that the US dollar became really weak today, and that also helped euro. So you have two factors to help euro versus British pound, and that's why I do expect this to keep going up. Fundamentally speaking, of course, we don't know how far it's gonna go, but really, again, depending on where you put your stop if you are in this short trade. So we'll see what happens. Euro Swiss, really, again, another nice a kangaroo tail, another nice hammer. So why did I take this trade? Oh, very simple. First of all, I'm already looking to enter New Zealand Swiss, so I don't want to enter another trade that is the same currency, because basically I'm increasing my risk with the same currency of Swiss franc. So I'm only gonna choose one. If I'm only gonna choose one, of course I'm gonna choose New Zealand dollar over euro, because New Zealand dollar is stronger than euro. But if we don't have New Zealand Swiss trade today, I'm still not gonna enter Euro Swiss, just because I don't have any fundamental reason to enter Euro Swiss. For me, euro is still very weak. So the only reason is that, yes, it's better strength than Swiss franc, but it's not strong enough to give me a conviction to buying it versus Swiss franc, because everything can change tomorrow if traders decide to buy back US dollar. As mentioned, the largely sold of US dollar today is really the sentiment. It's not anything to do with the fundamental data. So this sentiment could shift, as fast as the next session or next London session. Euro dollar, again, mentioned yesterday. I don't like to get into this kind of trade ahead of risk event again, because you get this kind of action. You get fill and you get stop. So really not looking good. Where it's gonna go, I really don't know. It really depends on the sentiment of US dollar. But definitely, I have avoided a trade like this just because you avoid putting bait ahead of this kind of bigger fundamental events. Euro Aussie, on the other hand, continue drop. As mentioned, Australian dollar is really pretty strong right now. Euro CAD a little bit up today, and that just basically show you the strength of euro, right? Even versus CAD, it did not go down; it actually reversed. Euro NZD. Now, Euro NZD was something I was quite interested to short it, but again, I can only choose one pair to buy New Zealand dollar basically. So I choose Swiss franc because technically, although it is a bearish big shadow, but I'm not liking this one better than the other one just because it did not close low enough. Now, for me, it does not penetrate a close below enough space. So for me, that's basically why I don't really like this kind of trade, Euro New Zealand. But it is tempting, definitely. But it could be like this one. You have a big shadow, it has no space here, so you actually reverse. You have another big shadow, so it is definitely tempting. But for me, because the risk on sentiment really hurt Swiss franc more, and Euro dollar is going to be benefited by the US dollar weakness. So that's basically my logic, that I don't want to enter Euro New Zealand short for this trade. But who knows, this might work out and New Zealand Swiss franc does not work out. We never know how it's gonna pan out in the financial market. So the other thing you can do, of course, is you can separate your risk percentage. So you can maybe put, if you risked 1%, you can put 0.5% in Euro New Zealand short and put another 0.5% in New Zealand Swiss franc long. You could do that so that you have essentially you are buying New Zealand dollar with 1%, but you separate with different counter trend. So that's actually another thing. I might actually do that. Now thinking about that, because that might be a good way to do it. So anyway, let me go over this real quick. Euro yen, really nothing to talk about. Another sort of update for Euro dollar. Really nothing too much to talk about. Okay, but pound Swiss franc, same thing, a small candlestick. Cable, again, I was mentioning, this is a nice technical kangaroo tail, but don't enter prior to this kind of risk event. If you enter and you put your stop loss at low, you get fill and stop out all within 1 day, and that's really terrible for me. If nowadays I got in a stop out all within 1 day, that's really something right with my analysis or my management. Pound Aussie, again, keep dropping lower. Just basically Australian dollar, it's really the dominant one. Pound CAD, same thing. You got this one, but it does not give you any signal. It does not give you any fundamental reason to buy British pound and sell Canadian dollar. Pound New Zealand, this is actually, again, not bad. Same thing as the other one. You could, again, do this by selling pound New Zealand. So if you want to do it, then you separate your trade again. You short Euro New Zealand, you short pound New Zealand, and you short you long New Zealand Swiss. So essentially, you still risk 1% for New Zealand dollar, but you separate in 3 trades. This actually might not be a bad one either. So I might actually do that. Pound New Zealand and pound yen. So same thing, nothing really happening here. Swiss franc, Japanese yen, I don't have anything here. Dollar Swiss, again, you go up and down today, a roller coaster ride for euro dollar. Dollar CAD, it's Canadian dollar is really benefit by this kind of it's kind of dollar weakness. Dollar yen, again, we don't really have an entry signal, but I do like what I see, to be honest with you, because I haven't lost anything in this dollar yen. And right now, if we can go back to this kind of level, that's perfect. That's really give us a better opportunity to getting a long dollar yen. Aussie Swiss, look at how strong Australian dollar is. Continue going up. Aussie dollar, same thing. Aussie CAD, Aussie New Zealand. And look at that. That's why I'm more really confident in New Zealand dollar right now. Is because look at when it versus Australian dollar, it's the only thing that's be able to hold up against it. And Aussie yen. So although Aussie is still the strongest currency, but New Zealand really comes at second. CAD Swiss. CAD Swiss again, not definitely. It's a short signal, but not something I'll do, not something I'm not buying, basically not buying Swiss franc versus CAD. CAD yen, it's a doji, really nothing to talk about. New Zealand Swiss, as mentioned already, it's a very nice pair to get into it. New Zealand dollar, another nice pair. However, for me, I do see this gap, this jump, but I don't want to really short US dollar in this kind of daily chart. So that's why I'm trying to avoid it. New Zealand CAD and New Zealand yen. New Zealand yen. So that's pretty much it. Really, the thing I'm looking at is short Euro New Zealand, short Pound New Zealand, or long New Zealand Swiss. You can either pick one or you can enter three. But for me, I always, if I enter three, I always place my risk percentage in accordingly. So you don't want to, put three trade and risk 1% each and become 3%, because then essentially you are putting 3% in one currency, and that's a big risk for me. I don't like to do that, so I separate my risk percentage. So that's pretty much it, guys. I don't really have anything else, but if you trade through the press conference, you definitely had opportunity to make money, but you could also lose money. So again, for me, this is definitely fine if you don't like to trade through these kind of events. But 2017, we will have a lot of these kind of events because it's gonna be a political year basically. Tomorrow, I don't really have any risk events all the way until 7 p.m. Eastern Standard Time. We do have Janet Yellen speaks, and then Friday we'll core retail and PPI data from US, and that's another opportunity to either buy or sell US dollar, really depending on what happened between now and then. We're gonna see what happened to the US dollar for tomorrow, how traders are react to it. But fundamentally speaking, it's still a very strong currency, so I'm still looking to buy. Other than that, if you have any question, feel free to let me know. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching, guys. I'll see you tomorrow. Bye bye.